Joining me now is Jason Katz, Senior Portfolio Manager and Private Wealth Advisor at NYSE-listed UBS. Good morning.
Good morning.
So what will you be watching most closely as trading gets underway?
Last week, all the talk was this is something ominous. And in fact, it was the beginning of a great recalibration. So what we're looking for is for stocks really to find their footing. With $6 trillion on the sidelines, there's still a lot of FOMO, fear of missing out. And so we're looking for buyers to step in and find really a recalibrated market in terms of should we be piling into AI or should we be broadening out? Last week, it was all about AI is going to eat the world or it's going to flop. And both can't be true at the same time. So we're looking for a market really to find its footing.
All right, and the Dow has closed above 50,000 for 2 straight sessions. What do you think is driving the recent gains across the major averages?
Well, for the last 3 years, we've had such narrow tech leadership in terms of earnings and stock performance. It's pushed everyone into a narrow universe of stocks. Now earnings are broadening out and capital is redistributing. So the divergence in performance is good. It highlights the need for diversification. It's that diversification in areas like materials, which are up 8%, or industrials up 10%, or energy that's up 20%, that's allowing the more cyclical parts of the market and indices such as the Dow to ascend above 50,000.
All right, and we are in the heart of earnings season with 6 of the 7 Mag 7 companies reporting in just the past 2 weeks. What are you taking away from the data so far?
Well, 76 some odd percent have beat expectations, albeit at a narrower margin than last quarter or last year at this time. But the top line is exceeding higher than it was last year at this time. So what we're gleaning from that data is that companies continue to do more with less, not only from leveraging AI, but leveraging the technology they invested in over the last 20 years. So I think investors continue to underestimate the resilience, not only of the consumer, but of corporate America.
All right, and speaking, of course, of data, January jobs and inflation data are due this week. How are you pricing in expectations?
Well, I continue to expect jobs to modestly decline, 1, because of immigration policy, and 2, because of leveraging AI. And it's a very strange environment when you have GDP last quarter growing out of over 5%. You have earnings beating expectations, but you see a deteriorating job market. So I think you're going to continue to see a little bit of that deterioration, but the Fed in the not too distant future will be stepping in and cutting rates, in our view, at least 50 basis points by the end of the year, which should be supportive of labor markets and the economy.
All right, and I understand that you feel that the everyday consumer is about to, quote, take the driver's seat. What do you mean by this?
Well, I wouldn't count the consumer out. This administration's been about vegetables before dessert. And last year, the vegetables were the tariffs and the dessert was the one big, beautiful bill. This year, the broccoli's been geopolitics. And I think the dessert and the pudding will be deregulation, rate cuts, and really an inward focus on affordability. So the high-end consumer has thrived. Now the everyday consumer is going to benefit from tax refunds, the administration's focus on affordability, especially with housing. And then at the end of the day, they look at their 401ks, the everyday investor, and they're seeing this wealth effect. So I think the everyday consumer and the everyday average Joe stocks that are cyclical both benefit in this environment.
All right, and how are you advising your clients when it comes to navigating the current state of the markets in our last minute together?
Well, as somebody that's been doing this north of 30 years and counsels individual investors, always rely on a thoughtful financial plan, always be asset allocated, be diversified. Don't just focus on the school of what's worked. You have to spread your risk out. Expect rate cuts, expect an economy that's supportive, expect a cyclically led equity rally and a reprieve in some of the higher growthier tech names.
All right, thank you, Jason Katz, Senior Portfolio Manager and Private Wealth Advisor at UBS.
Thank you.